So here we are with day trading oil and gold with binary options. Before I get into the presentation, of course, you're going to see this slide with every presentation, that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And these are educational sessions. Please do not construe anything we say today as buy or sell recommendations. We are doing this for your education purposes. And that will become abundantly more clear when I do what I call an off-roading session and I demonstrate the platform. I'm going to be clicking around and I'm not going to be making any trade recommendations, but we are going to look at the markets. By the way, a brief introduction to who I am. If you haven't heard me speak before, I am the head of education here at Nadex. I joined 2 years ago, and it's been part of a long career in financial services and trading. I did spend 8 years on the floors trading on the Chicago exchanges before I moved to different exchanges and brokerage companies, namely Eurex, which is a large international futures exchange out of Frankfurt, Germany. Then it was Boston Options Exchange, and we rebranded as Box. We introduced price improvement for retail customers, and ended up driving the entire equity option space to pennies. Rather interesting time in the industry. To the New York Stock Exchange and E-Trade before I ended up at IG Group and Nadex. I did study at UCLA. I grew up in California, and I've got both my BA and MBA from UCLA. Now, what are we going to talk about in this particular session? I am going to do a quick little introduction to who is Nadex. I can tell you that a huge chunk, fully 2/3 of the people who have registered for this event and are on have never done anything with Nadex before. And the question is why are you here and what is Nadex? I'd like to cover that very briefly. And then I'm going to get into binary options. I'm going to talk about what they are. I'm going to define them. I'm going to talk about how they work. And then I am going to spend some time doing a demonstration. I think show and tell really enforces the concepts that I talk about. And when you see it in action and you see that it's not that complicated and using the Nadex platform can be pretty easy to do once someone shows you the basics, it really connects the dots. And then you can actually, as you learn that, you can start thinking about applying what Brian just taught you in terms of a strategy and how to take advantage of different opportunities in the markets, particularly around news events. So quickly on who is Nadex, and in the financial services space, we love our acronyms. Nadex is simply an acronym for North American Derivatives Exchange. Now, what's really important, and when we're talking about binary options, and I really want to emphasize this, is we are a regulated exchange in the United States. We are regulated by the CFTC, another one of our wonderful acronyms, the Commodity Futures Trading Commission. And the reason I mention that and why I've highlighted regulated is because if you go on the internet and you look up binary option providers, you can find other binary option providers in the world. The catch is there are only 3 binary option providers that are regulated in the United States, and Nadex is the premier one where almost all of the volume takes place. One of them is a small exchange where they only trade weather contracts. But what's really important is you can see that on the internet, there are some nefarious actors out in the world, offshore exchanges. And I would say to you, if you're trading with an offshore exchange, simply caveat emptor, buyer beware. If you had any challenges, problems, and you were looking for some type of recourse, there's no one to go to. We are a true and proper exchange. We have to adhere to the laws, rules, regulations, principles of the United States, and all of those challenges that people have, like being able to get their money out of an account and all this other nefarious behavior, that doesn't happen at Nadex. We are regulated. We have regulatory oversight. So I just want to leave it at that. Now, what is Nadex? What did we do when we entered the marketplace? Is we designed contracts for the individual retail trader. Now, what does that mean for the retail trader? And we created contracts and products that have a very low cost to entry. And something that Brian really hammered home is all of our contracts have clearly defined risk. You cannot lose more than what you initially put into a trade. So when you hear about people having these horrible experiences trading where they lost all their money, or they lost more money than was in their account, or more money than they have, that can't happen at Nadex. Our contracts are small notional value. Our binary options have a maximum value of $100. That is, in the end, that's it. They're $100 maximum value, and they can't go any lower than zero. So they're low cost to entry. You don't need thousands of dollars to access the markets. You can get into price action in these markets, and you do it with very clearly defined risk. And we do offer binary options, and I'm going to talk about knockouts and call spreads later, but this is what Nadex was designed for. And what's really interesting is over the past 2 years, so many retail traders have come into the markets, and many of them have found a home at Nadex because we were designed specifically for retail traders, for people who are new to the markets and want to get in and understand and learn trading behavior, but do so in an environment where they knew what the risks were before they even got into the trade. So let's talk about, oh, by the way, I almost forgot I had this in here. If you're brand new to Nadex, or if you've been around Nadex for a while, we do run a refer a friend program. And if you have a live account, you have your own personalized link that you can invite people. And if you send your friends the link and they open an account using your link, and they place 5 trades within 30 days of applying for their Nadex account, they'll get $100 and you'll get $100. And you can do that with up to 10 of your friends. And a lot of retail traders, particularly even newer traders, they like to trade with their friends. They want to make it a more of a social activity. This is a way where we incentivize you to bring your friends in and you can trade together. So I like to mention that up front. But let's get into binary options. And let's first talk about what is a binary option. And I'm going to define it as a short-term risk reward contract. Now, it's as simple as a statement or a prediction. That's it. And there's an underlying market, a condition, and a time frame. Now, when I give you an example, let's use gold as an example, because today we're talking about price action and commodities. A binary option in the gold market. Will gold be above 1760 an ounce in the next hour, or in the next 2 hours, or at the end of the day, or at the end of the week? So it really is choosing your underlying market, whether you want to trade gold or oil or natural gas or silver when we're talking about commodities. So you've got your underlying market, the condition, and sometimes that condition is called a strike price or a level, and it's going to be in the form of a question, and there's going to be a time frame. Is this going to be higher than this price at this time? It's as simple as that. Now, the interesting thing, something that differentiates Nadex from other binary option providers, is that you can both buy or sell these. And I'm going to talk about that in a moment. And people are going, well, how can I sell something I don't own? That goes back to the fact that it's a contract and you're simply making a prediction. And I'm going to get into that in a second, but it doesn't matter whether you're buying or selling, your risk is capped. Your reward is also capped, but you know what you're getting into before you do a trade. Don't worry, we do all the math for you on the order ticket. I will show you that. But binary options will trade between a price. There's going to be a price that you're trading or a number that you're trading, and it's going to range between 0 and 100. I told you it can't go any higher than 100, and it can't go any lower than 0. Now, let's talk a little bit more about what that number represents. Now, when we're talking about binary options, as you noticed, will gold be above 1760 an ounce at the end of the day? It's a prediction. It's a true or false prediction. And in the end, the statement is either true and it's above, or it's false and it's below. There are only two outcomes in the end. That's why it's called a binary option. A binary option is a pretty fancy word, but it only means that there can only be two outcomes in the end. Either the statement is true or the statement is false. And if the statement is true, it will go to 100. And if the statement is false, it will go to 0. It's as simple as that. Now, the question is what does that number really represent? And this is probably the most important concept of understanding what you're trading when you look at a binary option, is that you could think of that number as the probability of the event eventually being true. And that is determined by the marketplace. Buyers and sellers are going to try to buy or sell. Everyone's making their prediction, and that will help through the market function where everyone gets to choose what they think their probability is. And if you think it's going higher, you can buy it. If you think the prediction is going to be true, you can buy it. If you think the prediction is going to be false, you can sell it. All right, so, and it's a probability. You're trading a probability. So let me give you an example. If gold were trading right now at $17.60 an ounce, and I think it might be close to that, and your binary option is, will gold be higher than $17.60 an ounce at the end of the day? Now, if you think it's going to be true, you would buy it. If you think it's false, you could sell it. But what's the probability? If it's currently right at the condition, if it's currently right at the strike, will gold be higher than 1760? And gold is currently trading 1760. There's an equal chance that gold will settle higher than 1760 as it would that it would settle below. I don't know what's going to happen. It can either settle higher or it can settle lower. Because there's an equal chance, that's probably a 50% probability. There's an equal probability that it goes higher, an equal probability that it settles lower. 50-50, it's going to trade right around 50. Right? Now, if the question were, will gold settle above 1760 an ounce, and it's already above 1760, well, since it's already above, the probability is probably going to be higher. And if gold were currently trading below, the probability of it finishing above there, it's probably going to be lower than 50. So really what you're trading is the probability that the statement is going to be true. Now, if you trade other listed options, timed expiration and volatility will be factored into those prices. But when you're trading the price, the probability. Now, what's interesting is while that's a probability, I also told you these contracts are worth $100. So as it turns out, that number is also the dollar value. We made it easy for you. So if you were to, for instance, buy a binary option at 50 and you're hoping that it goes to 100, you're hoping it's going to be true. Your prediction is, I think gold's going to be higher than that price. I bought it at 50. I risked $50. What could I potentially make? Well, if it finishes true, it would go to 100. So you would have risked $50 to get 100. You would have made 50. You risked 50 to make 50. Now, if you thought it was going to be false, you could sell it at 50, hoping it goes to 0. Now, what do you have to put up on a trade? What does it actually cost to do a trade, to trade a binary option? Well, it's simply your maximum risk. If I buy a binary option for 20, there's a 20% probability that it's going to finish true, which means it could go to 100 in the end. You would only be risking $20, and your goal is, hey, I could potentially make 80. Now, on the sell side, if I sold one at 80, it's currently, there's an 80% probability it's going to go to 100 at that moment in time. But if I sold one at 80, the most I could lose, I sold it at 80, it could only go to 100. The most I could lose is 20. So I would have to put up $20. And what would I potentially make? Well, if I sold it at 80 and it went to 0, I could potentially make 80. Now, we do all the math for you on the order ticket, but I just wanted you to understand that when you're trading binary options, it's the probability of the event being true. It's a simple yes or no prediction. Do I think it's going to be above that price? Yes. Do I think it's going to be below that price? No. I can either buy the binary option or I can sell the binary option. Now, I'm holding one thing back because you do not have to wait until the end. I'm going to hold that idea for a minute, pin that up, but let's go through how the price of binary options move around. And by the way, on an order ticket, and I wanted to just to show you what you would see on an order ticket. And here's an order ticket for gold. Will gold finish higher than 1765? Notice that we have an indicative price right on the order ticket. Notice that right now gold's trading right at 1765. And in this particular example, there was still 17 hours and plus until expiration. So in the end, in 17 hours and 38 minutes, this contract will either go to 100 or 0. It's got to be one or the other. But in the meantime, the price is going to move around because the probability of it finishing higher than 1765 will change as time moves on and as the price of gold changes. Now, we've got our condition. There is a market. There's a price where you can sell. There is a price where you can buy. Do you have to trade on those prices? No. You can put a bid in between the bid-ask spread or lower. I don't want to pay 48. I'd buy it if it went down to 46. You can put your bid below. Or you can say, no, I think this is not going to finish higher. I think the answer is no, so I would sell. I could sell it between the bid-ask spread. I could even offer it a little higher if I wanted to. You can put your order into the market. There is no payment for order flow. We don't route your orders anywhere. Your order goes from you straight to the exchange. So you are interacting at the exchange level and you're choosing what price you would potentially want to trade at. Now, does it mean you're going to get a trade? If I really wanted to sell one right now, I would have to sell it at 48.25. I could put an offer to sell it in between. I'd have to have somebody else buy it from me, but that's how markets work. Now notice that you can put a price between, here's an example of buying one right between the bid-ask spread. And if I were to pay 50.75, it tells me the most I can lose is 50.75. I can't lose anymore. If I bought it at 50.75, that's the most I can lose. And the most I could potentially make would be it goes to 100 and I'd make 49.25. Now, we also do these calculations for you. If you were to buy one at 50.75, it's actually the midpoint between the bid-ask spread. It's telling me there's a 50.75% chance, and it's just a chance at this moment that it'll go to 100. Now, that probability changes. If gold starts trading lower, that probability is going to change. It's going to go lower. But at this moment in time, this is what the market is predicting. And if I were to buy one at 50.75 and it went to 100, I'd be making 84% return on my money. That's my return on investment. I risk 50.75 to make 49.25. I get an 84% return on my money in 17 hours if I'm correct. Right? We do these calculations to help you decide where you want to place your trade and based upon what you think is going to happen. Brian went through a strategy where he likes to use out of the money options where it costs less, your probability is lower, but your return on investment would be much higher if it were true. But I wanted to show you that you've got this on an order ticket. Now I don't want to spend a lot of time on this, but I am going to show you how the price of a binary option moves over the course of time and with the effect of volatility, because that probability does change. And it really is setting up to something I spoke about earlier, where in the end, it either goes to 0 or 100, but this price does move around, creating short-term price action for you to potentially look for opportunities to trade. So let's go through an example right now. And here's an example of gold. Will gold settle higher than $17.80 an ounce at 3 p.m.? And we've got a chart here. And you can see right where 1780 is on the chart. And I want to show you what happens to the price of the binary option over the course of the day if the price of gold moves and as time moves. And this is rather important. So early in the day, you can see that clearly gold was above 1780 an ounce, and the probability at that moment in time, the binary option itself, and I'm going to use the midpoint of the bid ask, would be 56. With the midpoint being 56, the market is saying there's a 56% chance that at the end of the day, at 3 p.m., this will go to 100. Okay, that this would go to 100. Now, what happened? The price of gold dropped. It dropped, and when the price of gold dropped, the price of the binary option also dropped. Now, it didn't drop dramatically. It only dropped down to 44. So now there's only a 44% chance of this binary option being true and the price going to 100. Why is it still 44%? Well, there's a lot of time left in the day, right? There's a lot of time for something to happen. Now, if we skip forward to the middle part of the day, gold has now basically gone sideways. Gold has gone sideways, and the price of the binary option, the probability of it being true, has dropped. That is actually what I would call decay. There's much less time left in the day. So at that point in time, the market is saying there's only a 36% chance. Now, there's still a 36% chance, but the probability of it has dropped. Now, what happens? The price of gold actually went higher, and now it makes a much more dramatic move. It's jumped all the way up to 74%. What you see with the probabilities and as you get closer to expiration is the probability of something being true or false is going to be much more dramatic as you get closer and closer to expiration. The price swings will be much greater. And that is something you've got to consider on the duration. How much time do I want to have in this contract? Brian mentioned sometimes you want to look at daily binary options like this. He happens to like 2-hour binary options where there's a 2-hour window and you're going to see much more price movement. We do have binary options that can be as short as an hour or as short as even 20 minutes. If you're trading equity indices, we've got 20-minute binary options. And if you're trading foreign exchange, we've got 5-minute binary options where the price action can be dramatic in the binary option. And some people want that volatility. They want that price movement. So you've got to make a determination on the time frame that you want to trade. Now, skip ahead and the price of the binary of gold dropped. Notice, of course, the price of the binary option dropped way down below. Now remember, if it settles at 1780 or lower, this will go to 0. And any place above 1780 or higher, it doesn't matter how high it goes, it can only go to 100. Remember, a binary option can only go up to 100 or it can only go down to 0. And in this case, it went to 100. Now, I don't want to spend a lot of time on the next 2 slides, but I want you to see, and if you want the slide deck, remember you can review this later at your leisure. But I wanted to show you how when in a low volatility environment, here's gold, will it be greater than 1780? And throughout the day, it never even gets near 1780. Early on, there's still a 40% chance. Notice midday, again, it's down at 34. It's interesting that the price of the binary option does not have to move in line with the price of gold. Notice here between middle of the day and right toward the end of the day, even though gold went higher, gold went up, the price of the binary option actually went down. It dropped from 34 down to 20. Now, why is that? It still has to get up above 1780, and there's very little time to do so, and it's a very low volatility environment. So again, as you get closer to expiration, the price swings can be more dramatic because in the end, it's either going to go to 0 or 100. In this case, it went all the way to 0. Now, this is the same example, only instead of it being below, gold was always above that 1780 an ounce. And again, notice between the middle of the day and the end of the day, actually, you know what? Notice between the end of the day where it was close to 80, the price of gold actually went lower, but the price of the binary option went to 100. Now, As long as it's above 1780, it will go to 100. It can go down to 1780.01. It will still go to 100. And if it hits 1780 or lower, it would go to 0. Now, I want to talk a little bit about the choices, because this is something else that Nadex does that is very different than other binary option providers, is we give a variety of choices. We allow you to have control over a lot of things for the trade. We don't just give you one choice. Some other binary option providers, it's, will this be higher from now? End of story. That's it. We're going to give you multiple, not only do we have multiple underlying products, we've got multiple underlying time frames. As I mentioned, 5 minutes, 20 minutes, hourly, 2 hours, daily, weekly. You can choose the time frame that suits your trade. And then for each time frame, there's going to be different conditions, different strike prices. So you can choose the level, you can choose the probability that suits your opinion. So in gold, for instance, you can see that we've got, every 2 hours or every hour, noon is a settlement time. What's going to happen at noon? And that had 42 minutes to go till expiration. What's going to happen at 1? And there's an hour and 42 minutes. What's going to happen on the daily contract at 1:30 p.m.? What's going to happen for the weekly contract? You can choose the time frame that suits your trade. And then within each one of these time frames, you're going to have multiple conditions. You're going to have multiple strike prices. And you'll notice that the probabilities of each one of these being true is suitable to where it currently is. So right now, in this example where gold was at 1765, the 1765 strike is right around 50. Interesting, I mentioned that earlier. If it's right near the strike price, it's going to be probably around a 50% chance. Now here's one, will it be higher than 1771? Well, it would have to get up to 1771. There's still 17 hours to go, and the market was pricing around a 33% chance of it settling up above there in 17 hours. And notice down below, there's higher probabilities. For instance, the 1753, it's already at 1765. It's already $12 above this strike price. They were giving it a pretty high probability of it settling above that strike price. They're putting it up in the 83% range. So notice that we give you those choices. You can pick the product, you can pick the time frame, you can pick the strike price that suits your opinion. Now, I told you I was holding this back, and this is an alert. This is an important rule when trading binary options. In fact, this is an important rule when trading any option, but I am going to talk, well, almost any option, but I want to highlight this. So if I haven't gotten your attention before, I hope I have it now. Just because there's an expiration associated with the contract does not mean you have to wait until then to see what happens. That is so important. That is so important. I'm going to say it again. I'm going to say it again. Just because there's an expiration associated with the contract does not mean you have to wait until then to see what happens. You can choose to exit your position early if you want. Now, why would you exit a position early? What reason would you have to exit a position early? Well, one would be to lock in a profit. All right, hey, let's use one of Brian's examples. He likes to use, out of the money binary options that have a lower probability. If you bought a binary option for 20, there's a 20% chance it's going to go to 100. There's an 80% chance it will go to 0. You buy it at 20 because you think it's going to go higher, and it does indeed go higher, and it goes right to your condition. And we know that if it's right at your condition, the price of the binary option at that point is going to be around 50. Do you have to wait to see if it goes to 100 or 0? And the answer is no. You bought it at 20, it's now at 50. You've got a decision. Do you want to go ahead and sell it at 50 and lock in your profits? You could sell it at 20, you could buy it at 20, sell it at 50. You made $30. So you made 150% return on your money. You put up 20, you profited 30. You more than doubled your money. You could sell it at 50, collect your $30 profit, say thank you very much, and move on to your next trade. Or you can decide to hang on to it and see if it goes higher, or you can wait and see if it goes to 100. The point is you don't have to do that. You can lock in profits early if you want. You can also limit your losses. So let's say, for instance, you bought a binary option for 50. You were risking 50 to make 50. You bought it at 50. You thought it was going to go higher. It went lower. It's now trading at 30. There's only a 30% probability. Maybe you read the chart wrong. Maybe your opinion now changes. Maybe you think, I've now changed my opinion. I thought it was going to be higher. I was wrong. I could sell it back out at 30 and just take $20 loss and take my lumps. Do you have to lose all $50? And the answer is no. You do not need to lose all $50. You can sell it back out at 30 and call it a day and move and live to fight another day. So that is a really important rule for managing your risk or ringing the cash register and taking your rewards. It all depends. You've got to make that determination, but you do not have to wait for the market to tell you what happens. You can choose to exit early. That is really important. And if you look at that binary option example earlier, where throughout the day it was moving up and down, there were a lot of different trading opportunities. And if you look at Brian's, and you go back and review Brian's session, he talks about moves around news, and then he talks about retracements. It'll happen. You might predict one thing, it goes your way, and yes, that's great, but then it could potentially retrace before expiration, in which case you missed your opportunity to lock in profits. So you've got to manage your risk, you got to manage your reward, but at least at Nadex, we give you that opportunity. You're not married to that position. You can choose to exit a position earlier if you want. I hope I hammered that home enough. Now, what's interesting is that inherently your risk is mitigated because everything has defined risk, defined reward, but you can choose to support that by entering and exiting your positions before expiration. You don't have to wait until expiration. Now, if you've got any questions, please email customerservice@nadex.com. I am going to try to answer. It looks like all the questions, because I've got my colleague Nelson in the background answering questions, which is fantastic. A shout out to Nelson for helping me. I do want to really emphasize that you might want to take a look at our YouTube page. Go to YouTube, subscribe to the Nadex YouTube channel, and I would encourage you, come join us every morning for our live analysis live streams, 8:45 a.m. Eastern. And again, you'll find plenty of content up there. Now, what I would like to do for the next 10, 15 minutes before we get into the next session is I want to do what I call a little off-roading. I told you we were going to do a little off-roading. I want to show you, I mentioned that I think it's easier to understand some of these binary options when you're actually looking at them in practice. So what you're looking at right now, in fact, I'm going to even make my platform a little bit bigger so it's easier to see on your screen. Notice when you come in on the platform, and I'm not doing a whole platform session. I'm just going to talk about binary options here. But if you want to do a platform session, I know my colleague Adam McCaden does them. He even gets into all the tools that are available on the charts, because we've got a variety of technical analysis tools and drawing tools to help you in your journey. But right now, I just want to look at binary options. All right, so here we are with binary options, and I am going to go to the commodities because that's what we're talking about today. And in the commodities, here we got crude oil, gold, nat gas, silver. Let's take a look at what's going on in oil, and I'm going to just choose one of the time frames. This is the 2 p.m. binary options. And again, notice how we have a variety of strikes to choose from. And notice how the probabilities are all here. Let's just click on one of these, and we're going to populate the chart. And I am going to now hide that so that we can see the chart a little bit better. I'm going to zoom in. As I mentioned, you can customize your chart if you want. You can choose which time frame you want in your chart. You can choose the length of your chart. You can choose how you want to see it. You can pick from technical indicators. You can put up, if you want to see your moving averages, There we go, moving averages. You can put your moving averages on the chart. You can customize your moving averages, and you can customize how you display it. Everything is available. You can set that up however you like. Let's go ahead and take moving averages off of there. I'm going to unclick it. As I mentioned, there are even drawing tools, right? You can, if you happen to like Fibonacci retracements, I can put on a Fibonacci. Oh, let me escape out of this. Oh, okay. Let's make this chart a little, here we go. Let's just take a look at from Friday to today. Let's just pick that time frame. Let's look at a Fibonacci retracement. I click on it. I go to the upper left-hand corner. We've been in a downtrend to the bottom right-hand corner, extend it over. Again, if you want to learn how to use some of these tools, I know my colleague Adam McCaden does go through a lot of that. I'm going to zoom in here and notice how I've got all my strikes up and down the right-hand side. If I want to switch which strike I'm looking at, I can just choose a different one. Now, if I thought I've got an hour and 19 minutes, right, and I can see gold has bounced off of its lows, right? Gold has popped back up. Maybe I think gold is going to continue to go a little higher, and in the next hour, it's going to settle above, what is this, 70.58. We're currently at 70.37. This is, again, not a trading recommendation. I'm just picking something out. I think it's going to settle above 70.58. So I would buy. I could buy this, and I want to place a bid in between. I only want to pay 28. I'd only be willing to pay 28. I know if I were to buy one of these, how much I could potentially make, how much I could potentially lose. If I did buy it and it went to 100, what's my ROI? What's my probability of success? Well, right now it's lower. It's the midpoint between the bid and the ask. And maybe I want to buy two of these. All right, I'd buy two of them. You know what? Let's lower this down. I want to put it between. Let's say I paid $24.75. Place my order. All right, my order was received, and you can actually see this on the bottom of the platform. My order. All right, you can see that I've got an order. I'm trying to buy two of them for 24. Now, look, it went a little higher. Let's adjust my order. I'm going to raise my price. Let's raise it to 26.25. Amend my order. Oh, I put it in and it went lower. And now you notice I did in fact buy two. And because gold immediately went lower, I bought two. And let's click on this trade. Right. It bought it and it immediately went lower. That's okay. That's going to happen. Do I have to hang on to my trade? No. Could I puke out of it? Yes. I could sell it right now and just say, whoops, I made a mistake. If I wanted to close my position, I could simply click close. Now, I still have an hour and 17 minutes. My opinion hasn't changed. I still think it's going to go higher. Now, I paid, let's actually look what I paid. I paid 26. Okay, I paid 26. And maybe I'm just looking to double my money. If it went up to 52, I'd sell it back out. Well, I can actually place an order up at 52. I'm going to click on sell. Notice I'm clicking on sell. I want to place an order to sell. I'm going to change the price to 52. And if it went up to 52, I would sell too. Now, by the way, we've got functionality coming where it'll say set profit right next to this. That is coming. I'm teeing that up. So it'll make it easier for you to place an order for you to potentially make a profit. And you could place your order wherever you want to place it. Now, I want to sell these two up at 52. I could place my order. And we can actually take a look right on the chart. I know that I bought two, all right, and I'm currently losing on it, but I'm trying to sell two up above. And I can look on my position. I did buy two at 26, all right, and I know that I'm trying to sell them back up at 52. All right, so the important point there is I can actually place these orders. Now, if I were to walk away and gold were to all of a sudden pop higher and somehow it went right to the strike price and these went to 50 and someone bought it for me at 52, I'd say thank you. I doubled my money, I'd move on. Now, if as time goes on, it doesn't look like I'm right, do I have to? I know I cannot lose. I know I cannot lose any more than the 26 that I put in. And again, I knew that when I put it on my order ticket, when I bought two at 26, I bought two, I can't lose any more than $52. I can't lose. I mean, that's it. My losses are locked in if it were to go to zero. So I am protected to the downside, and I've got an offer to profit to the upside if I want. Do I have to put that offer up above? No, because I think it's going to go to 100. I don't have to do that. I just want to let you know you could do that. Let's go through a quick example. I'm going to show you the other side. Let's take a look at a sell. Let's go to gold. We'll take a look at gold. There's 45 minutes to go here. All right. Here is gold. All right. I'm looking at yeah, that was oil. I'm looking at gold here, and all right, gold has rallied from early on in the day. It's rolled over. Do I think it's going to rally any higher? No. Maybe, you know what? I want to sell. I think this answer is going to be no. And I would be willing to sell these at, say, these at 28. If I were to sell one of these at 28, that's the most I can make. It goes to zero. I could potentially make $28. What could I lose? $72. Now, I'm risking 28 to potentially make 72. It's only a 22% return on my money, but my probability of success is pretty high. There's a 77% chance that I would be right. Let's drop this down as it's going lower. Let's put 24 in here. Let's go ahead and place an order to sell one at 24. Notice that my offer is right there. I'm willing to sell at 24. This is what would happen to you too. And now I want you to notice that I'm in a demo account, and your experience in a demo environment is going to be very different than a live environment, because I don't know who's looking at this right now, and people do all sorts of crazy things in a demo environment. But you can see there's my order. This is what would happen if someone wanted to buy it from me. I'm being represented. My order was not, there's no payment for order flow. I didn't sell this to somebody. My order went straight to the exchange. And now if someone wants to buy one of these at 24, they have to buy it from me. I'm first in line. So I can see there's my order to sell it at 24. Maybe now I'd be willing just to go ahead and sell it at 20. I traded, all right? I was gonna change my order. Now, I sold one at 24. I know the most I can make is 24. And if it keeps going higher and I feel like I'm at risk, and let's just say, do I have to lose all 76? If this all of a sudden went up to 50 and I decided I was wrong, could I buy it back at 50? And I would lose $26. And I could say, oops, I made a mistake. I'm going to take my $26 lump. I don't have to lose all $76. I could protect myself and stop my losses by simply buying the contract back.